Hello, this is Matt on the Moon Lambeau channel. Charles Gasparino, who is a Fox Business Network journalist, says that the feds are going after Ripple harder than they went after Bernie Madoff. Now, consider this. Bernie Madoff, for those of you not in the know, he created the world's largest Ponzi scheme. And then you have, if you want to compare it, there is no comparison, not really. Then you have Ripple and Brad Garlinghouse and Chris Larson, defendants in this case, and there aren't even claims of fraud. And the SEC is pretty damn thoroughly looked into all they needed to figure out how they wanted to handle what's going on with Ripple and XRP. There's not even a claim of fraud. Yet there's more scrutiny against Ripple than there was against Bernie Madoff, and Charles Gasparino of Fox Business Network makes that point. Now, Gasparino, over the last 2 or 3 days, has really been digging into the SEC versus Ripple case. The XRP community has caught his attention, let's say, and I've talked about that in recent videos, and it's a very good thing because look, mainstream media is coming in, but this is probably the biggest deal in terms of mainstream media covering this, at least to this point. But Forbes has covered this, the New York Times has covered this story, and so now to see Fox Business Network going after this is good stuff. We need people digging this stuff up, and Charles Gasparino is really digging into the details of what's going on here. So I want to talk about that, and also I've got opinions from 2 lawyers within the XRP community. We've got attorney Jeremy Hogan, who runs the YouTube channel Legal Briefs, and also attorney John Deaton, who of course is the attorney seeking to intervene in the SEC versus Ripple case on behalf of roughly 19,000 XRP holders. But before going further, I do want to be clear, I don't have a legal or financial background of any kind. I am not offering legal or financial advice, and you definitely should not buy or sell anything because of anything that I say or write. I'm just an enthusiast who enjoys making YouTube videos, but it's just a hobby, just for fun. And so here's the tweet from Charles Gasparino. As I continue to report, what's fascinating about the SEC on Ripple and Coinbase is the feds are giving these outlets, which have embraced regulatory dialogue, more scrutiny than they gave Bernie Madoff. Every industry needs regulations, but there is a degree of overkill. Yeah, so that's definitely true, and I'd say it's quite a big degree of overkill. And it's tremendous scrutiny, and it's true, it's not just Ripple, it's Coinbase. But man, you compare that against Bernie Madoff. Like it's kind of disgusting, isn't it? Especially when there's clearly no fraud. And in the case of Coinbase, my gosh, they created a new program called Lend, which offers interest-bearing accounts to customers, and it's in line with what other entities within the United States are offering, which have not come under regulatory scrutiny. So then, as a courtesy heads up, Coinbase is like, hey, just so you know, SEC, here's our Lend program. We're going to be launching this in a few weeks. And then they come back and they go, if you do this, we're going to sue you. And then, I'm sorry, Coinbase is like, I'm sorry, you said what? You said what, SEC? If you do this, we're going to sue you. Okay. I'm sorry. Did we do something wrong? Is there something in this that we did wrong or need to adjust? We can't tell you what that is. That's the SEC. That is exactly how they're behaving. That is actually what happened. They refuse to cite specifics as to how it's the case that Coinbase would be offering unregistered securities via their Lend program, but they insist that is what they'd be doing. Like the scrutiny, it's completely off the charts. And just for fun, let's compare this specifically to Bernie Madoff. I'm sure most of you have at least heard of this, but just a quick refresher. Take a look at this. Bernard Lawrence Bernie, and this is from Investopedia.com. Bernard Lawrence Bernie Madoff was an American financier who executed the largest Ponzi scheme in history, defrauding thousands of investors out of tens of billions of dollars over the course of at least 17 years, and possibly longer. He was also a pioneer in electronic trading and chair of the NASDAQ in the early 1990s. He died in prison April 14, 2021, while serving a 150-year sentence for money laundering, securities fraud, and several other felonies. despite claiming to generate large, steady returns through an investing strategy called split strike conversion, which is an actual trading strategy. Madoff simply deposited client funds into a single bank account that he used to pay existing clients who wanted to cash out. He funded redemptions by attracting new investors and their capital, but was unable to maintain the fraud when the market turned sharply lower in late 2008. He confessed to his sons, who worked at his firm, but he claims were not aware of the scheme, on December 10th, 2008. They turned him into the authorities the next day. The fund's last statements indicated it had $64.8 billion in client assets. So again, largest Ponzi scheme in history. Bernie Madoff, absolutely terrible excuse of a human. And then you have Brad Garlinghouse and Chris Larson and Ripple, and with Ripple certainly being the most transparent company in all of crypto, there isn't even a close second. There really isn't. Operating in broad daylight, regularly talking to the SEC. It doesn't get more honest than what Ripple has been doing. It really simply does not. And so to see the hammer come down on them, it's kind of offensive, but that's actually what's been going on here. And then take a look at this. I got a couple more comments from Charles Gasparino with the Fox Business Network. And he's doing his best, by the way. He is seriously digging, so it'll be interesting to see what he uncovers. And also, he's got all sorts of connections, which won't surprise you, including people at the SEC. And so we're going to be talking about that too in this video. Check this out. Based on my reporting, I think the SEC case against Ripple, brought by Jay Clayton, was less about his current work now than him deferring the SEC staff, etc., and bringing the case to protect regulatory turf versus CFTC on cryptocurrency. Clayton is known to bow to staff concerns. Doesn't mean it's a good case. In fact, protecting turf is a symptom of the haphazard way cryptocurrencies and blockchain is being regulated, and why we need consistency immediately, or we will get our clocks cleaned on this technology by China. And so I agree with the vast majority of that. As far as Jay Clayton, look, the question is why he did it. Why would he bring that enforcement last minute? We can't know what was in his heart and mind at that exact moment. There's no way to know. But I highlighted just yesterday an article that covered comments from former SEC Commissioner Joseph Grunfest, because he wrote a letter to Jay Clayton citing, hey, just so you know, if you do this, look, first of all, there's no sense of urgency. You don't need to bring the action now. And second, if you do, it's going to cause multi-billion-dollar losses to investors. So there's no need to take this measure right now. It doesn't make sense to do this. And Jay Clayton went ahead and did it anyway. So it seemed like this is something he really wanted to do, and he realized with the administration change coming in, with Biden coming in, if he was going to do this, it was his last moment to do it. And so he probably wanted to do it for some time, perhaps wasn't completely prepared to do it, but that was the last opportunity because of the administration change, and he just went ahead and did it on his very last day. That was it. And so don't know exactly why. But yeah, I mean, it's fair to say that you could say that has less to do with his current work. But even so, there's a lot of stuff that was done over the last few years that benefits the Ethereum Foundation and holders of Ethereum, specifically William Hinman, for example, and also Jay Clayton, arguably. And even if that doesn't have something specifically to do with Ripple, it's still not just. And you can see that the way that Ethereum and XRP are being treated, it's just not equivalent. And that much Charles Gasparino has highlighted. In fact, it might be... Oh, no, actually, I'm getting ahead of myself. So here's what Attorney John Deaton had to say on that topic of this idea of Jay Clayton and why he would have brought this complaint so last minute. And does it have anything to do with his current work now that he's no longer with the SEC? And Attorney John Deaton said the following. Clayton can try to disavow the decision to file the case against Ripple and XRP all he wants. It takes 3 out of 5 commissioners to vote for an enforcement action, but the chair dictates policy and whether a vote takes place on his watch. He directed its filing on his last day. Not only did Clayton and Hinman leave the SEC, but Mark Berger, director of enforcement, also left for Hinman's law firm. Considering the significance, you would think someone would want to see the case through. Was this case used as a weapon? I think we know the answer to that part, right? Was the case used as a weapon? And so, yes, 3 out of 5 commissioners required to get a vote in favor of this for the enforcement action to actually go through. And just the idea, though, of him doing this purely to appease people, what kind of spineless individual works quite in that way? Either it's right or it's wrong, and if he doesn't agree with it, he certainly shouldn't kowtow to the other employees at the SEC. Do I get a gold star? Did I do the good thing for you? You guys like me still? Am I on your cool kids list? That it's not a way to be a leader. It's certainly that. So if that's what actually happened, that's just that would be kind of repulsive to me also. So the truth is, I don't think we know the real reason that he did it last minute. But it's clear he wanted to, and it was his last opportunity to do so because he was leaving the SEC. That's what it looks like to me anyway. And then there was this article. I'm not going to run through this article, but Charles Gasparino commented on it. It was from A&B Crypto. It's titled, "Is there any logic behind the SEC going after Ripple and not Ethereum?" And so I'll answer the question, though, even not reading the article. The answer is no. There's no logic to it. There's incentive and motivation. For whatever reasons, certain people at the SEC, including William Hinman, got themselves in a position where Ethereum doing well would monetarily pan out for them, right? And so that's pretty damn clear. Now, it doesn't mean that they had to attack XRP and a bunch of other cryptocurrencies, but it's not just about attacking Ripple and XRP. I think that they're attacking the entire crypto space. And so anyway, Charles Gasparino happened to have been cited in this article, and he wrote the following because he was trying to make the point clear because he's trying to report. And so he said the following: "For the record, I wasn't trying to take sides other than point out what is arguably an inconsistency in the SEC crypto enforcement. Is there any logic behind the SEC going after Ripple and not Ethereum?" And so this is where attorney Jeremy Hogan chimed in because there's an XRP community member named Neatsbucks who tagged Jeremy here and wrote, "Hey Jeremy, do you find it odd that SEC sources are speaking on this during the Ripple lawsuit and are in fact confirming the SEC sees Ethereum as not a security, contradicting their own arguments versus Ripple?" And so that is something, and I talked about this just the other day also, because Charles Gasparino, he's got access to people at the SEC, and they're reporting to him privately, and they stated, I made a video where I was talking about this, they reported to him that the agency case against Ripple, it's basically that the company's infrastructure is still being built out, and so XRP, the token which was used to finance the thing, as Charles Gasparino writes here, is considered a security. But that's the thing. That's not what they're arguing in the court case, not at all. So if that's the reason, that's a notable departure from what they've been arguing. Because as far as decentralization, we've only seen the SEC or anyone from the SEC talk about the importance of specific cryptocurrencies being decentralized, because that plays into whether or not there's a common enterprise, which is part of the multi-factor Howey test, with the 4 prongs of the Howey test. Is there a common enterprise? But to say no, it's about the company, what the company is doing, infrastructure still being built out around XRP, just based on what the company's doing. That's a different argument entirely. And so that's what people at the SEC reported to Charles Gasparino, he says, right? And so then attorney Jeremy Hogan responded with the following: "Journalists are protected from forced disclosure of sources, so I am a little surprised by the leak, but not shocked. I'd be shocked if the source was a lawyer within the SEC, because that lawyer would be risking her license. But for every lawyer, there are 2 to 3 support staff. So, ... Point is, this leaked out, and apparently it wasn't quite supposed to. So if this is completely accurate, this is something, as Neatbuck cites there, it is something that is contradicting their own arguments against Ripple. But it wouldn't be the first time that they've contradicted their own arguments. In fact, take a look at this from attorney John Deaton. He writes the following. I'm going to share a screen grab that John Deaton put on Twitter here. But he said, "This is why the memo and evidence tweeted out below by the digital asset investor helps Ripple's fair notice defense. It's an objective standard. Ripple could have bad intent and still win. But don't take my word for it. Here is Judge Knepper." And I'm going to pull that up in just a second, but first I want to note John Deaton also wrote, "Who remembers in the Hinman deposition the question about if you called 10 different law firms, you would get 10 different answers?" So that goes to the external factors faced by market participants such as Ripple, which is why, yeah, exactly. So this is exactly why the fair notice defense is so strong here. And so look at these comments from the judge. I'm going to read just a couple of them here. But the defense seems to focus much more on the external factors and not what an expert would do when she evaluates those external factors. "And I have seen a case, and I would request if you know of one to provide it to me, that looks at a fair notice defense and asks about how somebody asserting that defense subjectively believed what their subjective belief was." And so let me pause there. What she's talking about, she's asking the SEC attorneys, if you can, to provide an example of a case where subjectively, we were looking subjectively at the defendant's beliefs to determine the outcome of the case. Because that would be precedent. So she's looking for precedent here. That's what she's saying. But the truth of the matter, as I've been reporting on this channel for some time, is that it's not about subjectively what was believed, even if they had bad intent. And I'm not saying they did, but even if they had bad intent, it's about what objectively is legal or illegal. That's what actually matters here. And the judge is stating, from an objective perspective, that's what matters. In fact, here's a quote. "My reading of the cases with respect to a fair notice defense is that an entity's subjective belief is not relevant. It could have bad intent. The question is, what were the external factors for the market?" Exactly, right there. Which is why this plays very strongly into Ripple's fair notice defense. Man, the SEC, they're having a rough go. They're having a rough go. I don't have any pity for them, but they're having a rough go. Bunch of frickin' asshats. I am not a financial advisor. You should not buy or sell anything because of anything that I say or write. That would be a very, very, very bad idea. Until next time, to the moon, Lambo.